Bhatia joins us, CIO with ITI Mutual Funds. Rajesh, why are markets falling the way they are falling? The mid and small cap stocks are getting smoked. I mean, everyone says that look, the correction was overdue. But if that was the case, then why is everybody feeling so remorse and so painful? I mean, if everybody knew this was coming, then why there is so much of agony and pain in the world?
So, Nikhil, it always happens that way. No risk in the market comes all of a sudden. People are always aware that the risk is building up, but the market then it climbs the wall, slowly. But when it comes down, it takes like the escalator route, and that's really what is happening. It's nothing unique. Even in 2008, we knew that there was a real estate bubble that is building in the United States. People were shorting real estate in 2005, 2006. When did the market actually correct? In 2008. People knew that COVID was an issue in December of 2019. It was called COVID-19, if you remember. When did the markets fall? March of 2020. So no risk comes very suddenly. Most risks are known to the market, but then eventually the market kind of reacts. So it's very normal. And what has happened to the Indian markets is that we just had a overvaluation of the market. Now, because there was a slowdown and because of there is a reset of expectations as to what corporate earnings growth will be, that you're seeing this kind of a fall. At all inflection points of the market, it is the changes in macro which decides the market direction. So it's, again, that is nothing unusual. Now, the only thing is that you're seeing a lot more pain in the mid cap and small cap, because who owns the mid cap and small caps? All other domestics. The mutual funds own it, the AIFs, PMSs, high net worth individuals, family office. Everybody owns it. Now, everybody wants to exit at the same time. So on low liquidity, you're seeing a lot more severe price damage. So the market movement is par for the course. This is how market actually behaves.
So what is the best way to perhaps approach small and mid cap stocks now? I mean, that is what everyone is asking. Everyone's got small and mid cap stocks in their portfolio. Let's be real. What is the best way to manage risk? And for those who own mid and small cap stocks, what should be a very basic approach?
So look, the India growth story. Now, we are a country which is growing at 7% per annum, maybe a lot lower at this moment, but we are poised to become a fantastic growth opportunity for the next 3, 5, 7, or 10 years. That structure of opportunity is not going away from India. How do you capture that? Actually, the growth rates are far better than the mid cap and the small cap. So the India story is really happening in the mid cap and small cap. Just that the enthusiasm for these companies went up dramatically. The median PE of India even today is about 40 times, which is quite expensive. So the only challenge is not the growth opportunity, just the valuation. So the strategy ought to be is wait for the markets to correct. Let the slowdown kind of address itself. In market has all seasons, rainfall, winter, summer, etc. For the moment, it's winter. So you wait for some of these corrections to come in. If you're a stock picker, you don't need 20 stocks. You need probably to make 5 incremental decisions. So wait for those opportunities where you have insights and invest at that time. But if you're a mutual fund investor or a fund investor, keep your SIPs going, because you will not be able to time the bottom. So just keep your SIPs going. India is a great story in the long term, just that the short term is a little more challenging.
All right, the short term does look a little bit more challenging, but hi Rajesh, this is Shrishti also joining us. But how much more correction cannot be ruled out in this particular market? Because what factors that we know so far, there was a Trump trade that was going on, which did pull out some money from the emerging markets. Other than that, the corporate earnings, the outlook doesn't bode well, and there has been a slowdown in the government capex push as well. But given all those factors, and like you also mentioning, markets do react in some of the known factors, how much more correction could be in for the markets? Because what we have seen is already a double-digit decline from those all-time high levels for Nifty, Bank Nifty, and even the correction in the broader market space. So 5 to 6% is something that we can work with, or rather 20% correction is what we can call out for, which officially makes us to enter in the bear market.
Look, I know that people are feeling the pain of the decline. But how much have we really corrected? We've corrected 13% on the Nifty, probably 16 or 17% on the mid cap and small cap. And that too, a lot of that has happened only in the last 2 days. But if you look at the upside, the last 2 years, I think the Nifty is probably still up 35+%. The mid cap and the small cap index in the last 2 years is probably up 60% plus. So from our 60% plus, if you have declined by 15, 16 or 17%, I wouldn't think that that's a dramatic decline that has already happened. Like I said, the median PE of, India is still at about 40 times, right? So my sense is that you should just allow. Now, nobody really can predict these things because, usually a lot of these things evolve. When 2008 cracked, that was Jan 2008. When did the Lehman crisis happen? It happened in September 2008. So some things just evolve. So my sense is just allow it to evolve, but on a big picture basis, please keep in mind India is a very good market. You'll not be able to time the bottom. So just keep your investments. If you're a stock picker, find those 5 stocks where you think valuations have become attractive and has a fantastic growth opportunity. If you're a mutual fund investor, keep your SIPs going and keep the faith.
Keep the faith alive is what you're calling out for. Indeed, given the correction, a lot of the traders, investors are doing the same. But Rajesh, also help us with some of the sectors where you still believe there's some silver lining and the growth trajectory looks good. And if you can highlight some of the sectors from where one should stay away from in this market.
So basically, if you're looking for value, the value is in really the large caps. And I would say that the stories which are still intact are telecom, private banks. I know that there is going to be a challenge with insurance companies with the budget. There may be some implications, for that. But are they offering value? I think they are. The large private insurers are offering value. So these are some of the businesses which I think are going to do well. I would say that I know that digital commerce is expensive, but the kind of growth rates that these companies will experience, it would be certainly a sector to kind of look at. Those are the kind of sectors that I would kind of back. Pharmaceuticals is interesting, but I think it's a little expensive. On the negative side, I would be very careful with global commodities, to some extent, inflated capital goods, pockets like that.
How do you see the tech space moving? Sometimes we say AI, sometimes we say, deep seek. We may start saying something else after 10 days. But how do you see the tech space moving?
So, I'm quite optimistic on the tech space because I think we are going through this rounding off effect of demand. And I think if the entire story is really, what does Trump want to do? He wants to energize the US, right? He wants to cut taxes, put tariffs, deregulate businesses. I think that's a big one. I read somewhere that there's going to be $4 trillion of M&A. And all I'm reading is in America, there's a lot of energy in the corporate sector to invest and to hire. So if America is really going to get energized, and that's 65 to 70% of sales for a lot of Indian IT companies, that means greater demand. And so my sense is that there is a little more volatility in the Indian IT space because the current demand momentum is not as strong. It's all a little bit on expectations of where this will be. But I think we are very reasonably clear that the demand momentum is bottoming out and actually there is going to be acceleration as you move forward. So given the slowdown challenges that we have in India, I think again, IT makes enormous sense in your portfolio.
What could be the turning point for the market? Could it be budget? Could it be Fed? Could it be RBI? I mean, what in a sense could act as a catalyst to trigger the turn in the market?
I'm not really expecting the budget to be a turning point. At least that's not my expectation. Look, we have to go through an inevitable fiscal consolidation. This year also, a fiscal will actually be a drag. It doesn't matter how you cut it. And it's a very responsible thing for the government to do because I think this government has emphasized macro stability more than growth. And I think post the COVID crisis, we did go up to 9% of GDP as fiscal deficit. We have come down to probably 4.9. Maybe the number will be lower for financial year 25. And we are targeting 4.4 for financial year 26. Now that fiscal consolidation is necessary because debt to GDP for India is at about 85%. Now that's one of the highest in the emerging markets. So there is a necessary need to not use fiscal as much in the current circumstances, even though we are facing a slowdown. So my expectation from the budget is not that it will be an impetus, rather it will still be a drag on growth. So not too much expectation from the budget. I think the volatility in the Trump tariff trade, etc., is also not over. I think we're already reading, although it has been delayed, we were expecting a lot more measures to come on the first day. But probably, I think there is a need for him to, he has some smart guys. The Treasury Secretary is an ex-hedge fund manager. He realizes how markets will react in case they go ahead with all the measures all at once. But we are still reading that Mexico and Canada could see 25% tariff hikes as early as next week. So some of that volatility caused by the Trump trade is not over. So that's also going to evolve as you move forward. So my sense is just be a little more patient. I think I heard you say, Nikunj, at the start of the session, that let all the events play out before you make a more conclusive decision. It's a slowdown. We're still in an expensive market. There's no need to hurry in this market. Let things evolve, and then be a little more patient, and you can take your decisions later.
We've seen what could be called as a compulsive unwinding in small and mid-cap stocks by HNI crowd.
Yeah.
Perhaps a 30-second answer. Are there any evidence of redemptions coming in small cap funds in the industry or for you?
No. So it's surprisingly quite resilient. Yes, we have seen a bit of a slowdown, but not redemptions.
Appreciate that. Have a great day and thank you for joining us.
If you like this video, then like, share and subscribe to ET Now.